Hi there, welcome to Nappy Invest. It is May the 26th. Trading has ceased for the day on the ASX. It is now 4:22. So we're nearly up to the point where trading platforms that are 20 minutes delayed will be updating to the end of the closing auction. And I have already released a video today. That was the March quarter update for Point Terra. Released that in the morning. And I think whenever I release a video in the morning, more than likely that's because I'll be doing a daily update video in the afternoon or early evening. Now, before we have a look at the announcements on the ASX, and typically Friday is quite boring when it comes to announcements. Sometimes I don't even have to have a look at the announcements on that day because most companies want to release their announcements during or between Monday and Thursday, not Friday, particularly towards the end of Friday, unless you've got some bad news. And maybe you might want to release that after closing on Friday and hope everyone forgets it by Monday. So before we have a look at the ASX announcements, I just want to, and it would be amiss if I don't talk about what happened with NVIDIA overnight. Share price up 24.4% on a fairly bullish outlook from the company. So it wasn't the results per se that caused this excitement in the market. It was their estimates or the guidance for the third quarter was significantly greater, 50% greater than what the market expected. And when that happens, you see the market reaction, share price up 24.4%. Not only that, there was not a bystander effect, sort of an association effect. So those other companies within this sector saw not a similar price increase, but they also saw share price rally. For instance, Taiwan Semiconductors up 12%, and there was a few other companies like this. Microsoft now can be lumped into this sector, I think, up 3.9%. And even though a lot of companies on the Nasdaq were down overnight on the New York Stock Exchange and the Nasdaq still rallied by over 2% because of Nvidia, Microsoft, TSM, and companies like that. Now, the really interesting thing about this announcement is the current valuation of this company. Now, I was thinking of taking a position in Nvidia way back about 6 or so months ago. So even when the share price was down at its low, $110 in the middle of October, still the PE ratio at that point was still really high. And according to TradingView, the PE ratio of this company is 160. And there was a really interesting article in the AFR today titled, "If AI is a bubble, then NVIDIA is the flag bearer." So there's a really interesting article. It's free. I didn't have to do anything nefarious to actually read this article. And they go into why the share price did increase today in terms of the forward-looking guidance from the company really beat market estimates by something like, they did mention here somewhere, by 50%. But what was really interesting is this little paragraph. The numbers were pretty ho-hum. Earnings and revenue were ahead of analyst expectations, but sales, which came in at 7.2 billion versus 6.6 billion, were actually down 13% on the previous year. So compared to previous corresponding periods, sales were down. So it's all on these expectations of what's going to happen for NVIDIA in the June quarter. And that's why the market got excited. So if you have the opportunity, I would recommend going through this article in Financial Review. Very interesting article about a little bit of froth within the AI or even the semiconductor sector right now. So that's NVIDIA. I'm okay with that because I am a shareholder of TSM, and I think TSM, if you compare it to NVIDIA, TSM has a PE ratio of 13.9 right now. So I think there's a lot more for this company to run than NVIDIA. However, a lot of, I wouldn't say hype, a lot of froth in NVIDIA right now. Now onto the ASX announcements, starting with Fisher & Paykel, another company I do own, a New Zealand-based company, and they released their preliminary final reports. So the full year results at 7:30 a.m. Share price was down for the day, 6.3%. I actually did have a look at the performance of this company on Open just to see how the market was going to react. I don't really care that the market reacted like that because I'm in this company for the long term. I took a position in Fisher & Paykel Healthcare because I thought there was value. You see the share price tumbled a lot from about a year or 2 years ago. In fact, it fell from about $34 all the way down to $16, so more than half. But if you have a look just at the monthly chart, you can see the hallmarks of a high-quality company. Share price from the bottom left to the top right. Revenue growth is really good. So I look at revenue per share growth and this company has more than 10% revenue per share growth over the past 10 years, really good return on invested capital, everything you want in a high quality company. Now, because of COVID-19, this company has gone from having tailwinds to headwinds. That's why the share price went through into this downtrend during the past year, but the sentiment in this company has shifted. Now, in saying that, there might have been wind that these results might disappoint the market because the share price took a bit of a tumble during the first 4 days of the trading week. In fact, the share price fell from $25 down to $22.69. I think it finished at 48 cents. So it was a little bit, share price was a little bit down during the closing auction. So hey, I haven't even had a look at these this report just yet. I'll leave that for another day. But all I want to see is reaction from the market, and I think the market might be overreacting just a little bit. Now on to the next interesting announcement. Well, not interesting, but Appen did have their AGM today, and their presentation started off with sort of a clue to what they're thinking about. And that was sort of a chat with ChatGPT or whatever AI thingy, whatever you want to call it. So it's a really interesting way to start their presentation. Just waiting for this to load up. I should have opened this before. Not sure why it's taking a long line. It's not a long document. Anyway, so they started their presentation with a chat via ChatGPT. Write a very short thank you note to investors who recently attended Appen presentation, and then they looked at the response from ChatGPT. And this is exactly what you should do when you're speaking to these sort of things. You have to get a better response, you have to talk to it like a human being. And I've noticed ChatGPT makes a lot of mistakes. And as soon as you point out its mistakes, it corrects itself, just like a human being. So they responded with, make it more friendly. These people are our valued investors. And then there's another response from ChatGPT with a much better response. And then Appen goes in talking about AI, how big AI is going to be, that sort of thing. And so you can just see how Appen is pivoting to take advantage of what's going to happen with AI over the next few decades. It might be a very important pivot for the company. Well, maybe not pivot, but they're really aligning themselves with AI right now. Anyway, so that was semi-interesting, not that interesting. Another sort of semi-interesting announcement was, what time was this? Sayona at 8:38. I did write down all the time. So Sayona went into trading hold at 8:38 a.m. because they're doing a capital raising. And I did notice they've announced a capital raising specifics at 3:29 p.m., a $200 million placement to speed Quebec lithium production. A lot of times companies will say accelerate. And in this case, they've used the word speed. I'm the biggest fan of when companies use the term accelerate. We're using or we're having this capital raising to accelerate our growth plans. Just stick to your current plans and then everything will work itself out if you have a good business model and a powerful enough moat. And Sayona Mining doesn't have a moat because they're a lithium miner. No mining companies have moats. That's not exactly true. There will be some mining companies that have a small moat. For instance, Fortescue have a small moat because they can get the iron ore out of the ground cheaper than other companies, iron ore companies, not BHP or Rio Tinto. I think they're fairly cheap as well. So there are subtle moats that some of these mining companies have, but Sayona doesn't have a moat. And, a $200 million capital raising to speed up Quebec lithium production sounds fine for me. Market cap of Sayona is almost $2 billion. So it's not a big dilution, a 10% dilution to current shareholders. Our next company was Terracom. Had an ASX price query because the share price decreased heaps yesterday. I did notice this. Let's have a look at Terracom. So share price decrease 20% or something, 15.8% yesterday on pretty big volume. We know it's big volume, 20 million shares traded. And last time that this company had that many shares traded was back in March. The share price rose 2.7%. So whenever the ASX sees the share price increase or decrease by a lot on high volume, a company more than likely will receive a price and volume query. In this case, it's just a price query. I did not have a look at that. And share price down a further 4.7% today, more than likely because it has something to do with coal prices. I don't know, just guessing. Our next company is Hammer. Well, I'm really calling Hammer, Trading Hold, another capital raising. I'm not going to talk anything anymore about that company. Fisher Paykel, and then we had Latitude Group. So this is an interesting announcement. So Latitude at 9:40 released half and full year guidance and cyber update, and then 2 minutes later released a Latitude cyber crime update. Share price took a bit of a tumble at the start of trading. In fact, share price went down to $1.18. Did recover during the day, so nothing too significant for Latitude LFS. So not as exciting as it was at the beginning of the day. LFS. Well, it's really interesting chart. Massive plunge in March. Share price going sideways the last month or so, and then this plunge. Really interesting one-day candlestick as well. Let's have a look at what's a LFS. Really interesting candlestick as well today. So you can see you can hardly see the body. So the share price opened at $1.25. Opened at $1.25, making sure they're right. Fell down to about $1.17 and then recovered back up to the price it opened up. So you get this candlestick with a very long tail and no body. That's a bullish sort of candlestick. What do they call that? A hammer or something like that. And it's really interesting, the share price just going sideways. This is the very definition of a share price consolidating from the 17th of April all the way through to the 26th of May, share price just going sideways. So it's really interesting after a bit of volatility in the preceding 2 months. So not much action. I thought there might have been a little bit more decrease in Latitude Group's share price today, but it wasn't. So that's not that exciting, to be fair with you. Then we go past 10 o'clock. So I did have a look at the announcements before I started recording this video. Auswide had a bank trading update, share price up a little bit, 2.9%, nothing too exciting. Acrow Framework and Construction Services, acquisition of formwork panel system and guidance upgrade. This is those are the two words I'm looking for. Guidance upgrade. More than likely it's profit guidance update. I have not had a look at this announcement at all, but more than likely the share price is up. Haven't looked at their response from the market, up 5.3%. This is a pretty good looking chart, although I haven't looked at it for a while. Nice uptrend, a nice little dip. So maybe the buy the dip situation for Acrow, but a beautiful looking chart here and a nice announcement with a profit upgrade, or at least a revenue upgrade. And the last company that released something today was Supply Network at 1:55 p.m. Supply Network full year guidance update. So I actually did write down the numbers. So their guidance was, actually I didn't write down the guidance. I wrote down the results from last year because they didn't mention any results in this particular announcement. So they're expecting a revenue to be around 250 million. Last year, their revenue was 98.4 million, and they expect profit after tax to be 26.5 million. Last year, it was 19.5 million. So that's a beautiful increase. I'm going to call Supply Network, I think I've already called it once. This is a high quality company on the ASX, and the market reacted kindly, up 4.7%. However, if you do look at the chart for Supply Network, it's going sideways. So this is not a breakout. I was thinking maybe this could have been a breakout in Supply Network's share price, but it's not an all-time high. We saw an all-time high in November. Share price got to 13.40. We also saw the share price get to 13.40 in April, and current share price is about $13.30. So not an all-time high for Supply Network, even though this was a really good announcement from the company. Definitely a company to put on your radar. Some would say there's no liquidity, very few shares traded in this company, but if you like the future of the company, liquidity should not be an issue for you if you plan to hold the company shares for a long time. So that's really all I've got today. So let's have a look at, we'll get rid of, go away. Get rid of you. Let's have a look at the best performers on the XAO today, the All Ordinaries. Well, this is the worst performers. IMM, Hum, still going badly, down 8.2%. Clover, remember, I mentioned Clover yesterday. I was surprised the share price was up after profit downgrade, or some sort of downgrade. Share price down 6% today. And Universal Stores down another 5%. Share price keeps tumbling for that company. CCX, which is City Chic, down 5%. So a lot of other companies here down a fair bit. Ares Resources down 4.7%. Nothing too massive. Best performing companies, Catapult up another 13.5%. I think the share price is definitely breaking out for that company. Also, Audinate, a company I also own, up 8%. Big Tin Can up 7.7%. Megaport up another 6.2%. BrainChip up 6.2%. So a lot of tech companies performed well as well today as well as yesterday. And I think that's all I have for that. Just have a quick look at small ordinaries. And nothing too exciting there. So nothing out of the ordinary. Adbury up another 5.6% after being up about 24% yesterday. So that momentum has kept on going. And a company that has broken out yesterday has continued its breakout today. So maybe that's a sign, or maybe that is confirmation the share price in that company is breaking out. Now let's have a look at market index. Market index. Top gainers. Just move my head over there. So best performing companies on the ASX today, Blaze Minerals up 90%. Let's see if they released an announcement today that could explain why the market was excited in terms of share price appreciation. So Lithium Project acquisition, another one of these companies making an acquisition of a lithium project. And I'm telling you right now, so many ASX companies, mining exploring companies are getting into lithium. Most of these won't survive. And in fact, if some of them do survive, we're going to see a glut of lithium on the market in about a decade, maybe even less than that. Next Science up 28.6%. I was interested, or probably still am interested in this company. Not profitable. They had the AGM and managing director addresses, probably why they were up big today. And this is the whole reason I go through these top gainers. I want to see anything I've missed today, and this is the last thing I always go through. And otherwise, nothing too exciting here. Looking for any big AVA risk group up 12%. Yay! I am still shareholder of that company. Been a shareholder for many, many years. Volpara up 10% after releasing their full year results yesterday. EZZ Life Science up 10%. Another company that is profitable, very small cap company that is profitable and growing. And that's it. Let's have a look at the worst performing companies. I'll probably go through this later, personally, just so I can go a little bit more in depth for some of the best performing companies. And then I'm looking at some of the worst performing companies here, but I'm looking just for any big companies that fell a fair bit today, just if I missed anything, and nothing is really screaming out right now. In fact, Immutep, which was the worst performing company when we looked at the XAO, 14.9%. That might have been on a run recently. Let's have a look. IMM. Yeah, there's been a lot of volatility in this company. Or I shouldn't have shown you that. I should have just gone to TradingView. TradingView, yeah, so there was a big update about a week ago, 2 weeks ago, up 33%, and a lot of volatility since then. So sort of got to ignore that one. Otherwise, most companies that down big today are fairly small cap companies. And I'm looking for any Bs at the end, second last column. Hum has a market cap of less than $200 million now. Just wow. Insane. Oh, Fisher Paykel. Okay, that makes sense. Okay, so that's probably all I've got for today's video. If you have any questions or anything, I'd love to hear from you. And then leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own needs. That's it for today's video. Have a good day. Bye.